Joining me for the hour today are Joe Terranova, Steve Weiss, Jim Lebenthal, and Tiffany McGee, the CEO of Momentum Advisors Institutional Investment Services Group. Let's begin by going to the wall, take a look at where we stand right now. S&P creeping, albeit so slightly, into the green. Dow way off the lows of the early morning. Still down 8. NASDAQ's down about 11.5, somewhat muted there for the Russell 2000 as well. But Jim Lebenthal, Farmer Jim, that's where I want to begin today, of whether we are ignoring some of the risks that exist out there. Everything seems so perfect. The setup seems so perfect. Everybody keeps listing all the reasons why stocks should go higher. I want to remind you, though, a wide rollout of the vaccine is not coming for months. I'm talking a wide rollout. The CDC's Redfield today. December, January, and February will be the most difficult period for public health in the history of this country. That's what he said. I wonder if the market's paying attention to that enough. You still have no stimulus, though you do have some positive headlines within the last half hour or so. You have earnings estimates, which are elevated going into next year. And then you have a group of stocks, Jim, enterprise software, some cloud stocks, where valuations are in the clouds.
Boy, there's a lot to unpack. Thanks for giving me all that. I really mean it. Look, there are risks out there, and I'm staying invested. Does that mean I'm ignoring them? No, I'm perfectly aware of the fundamental risks that you just pointed out, to which I'll respond by saying the market does tend to look forward 6 months, and it says, hey, we're going to have the vaccine out there. But there's also technical risks that really need to be paid attention to. You've got very low put-to-call ratios. You've got big inflows into equity ETFs and mutual funds. You've got very bullish sentiment. You've got M&A picking up. That all does say, from a technical point of view, that we are getting a little ebullient in terms of risk ignorance, shall we say. However, Scott, here's the important point. It's likely to continue ignoring the risks. Why? Because you're in December in an up year. That's not a time seasonally that people like to realize capital gains. So you're likely to see the winners continue to win. And here's what's really interesting. The losers. Take a look at XLE and XLF, the energy and financial ETFs. They're actually doing really well at a time frame where you expect them to be sold. You usually sell your losers in an up year. Finally, I will say this. By the way, that's bullish. That's bullish that the losers aren't being sold. But those software stocks that you mentioned, that's the one area of the market that I think is a bubble. I think it's ripe for a correction or worse at any point in time. It's actually already been going on.
All right. So, Tiffany, let's talk about what Jim has said, because there's a lot there. And at times he sounded like Tom Lee. He sounded like Tom Lee, who says since 1945.
I'll take that as a compliment.
December, the bull, Tom Lee. That is a compliment. Tom Lee's been right. Since 1945, I brought this up yesterday. Tom Lee said when the S&P is up 10 to 15% to this point in the year, it's up 100% of the time in December. Savita Subramanian, Bank of America, December, she says, typically a seasonally strong month for both stocks and for active funds. She thinks stocks are going higher. A lot of other people think stocks are going higher. Is the market delusional about the here to there, meaning from now until we actually get the vaccine widely rolled out?
Yeah, so I don't think the market's delusional. I think, Jim brought up a couple good points. We're started off talking about risks. And I think one of the major risks that we have, to the economy right now is the lack of stimulus. I mean, we're sitting around talking about stocks and the markets. Well, the stock market is not the economy. But the stock market needs the economy ultimately to do well. It needs consumers to spend. It needs consumers to be doing, well and not struggling and not worried about where, their next meal is going to come from, how they're going to be able to educate their kids with laptops or lack thereof. So that's a very real thing. And so, Jim, also talked about, fundamental risks. Well, we're fundamental investors. And so, we're looking for opportunities. Again, you guys know that I like tech, but not tech with a broad brush, right? So tech that is, enabling other businesses to do well. Tech that is really forward thinking and being, like pioneers, if you will, in certain spaces. Quick pivot companies that are really thinking forward about tech. So that's what we like right now.
Okay.